traders, in this video we are going to see about how to catch this A++ setup using liquidity plus fair value gap and ICT trading secret, which means I use this entry model for taking a buy trade. I personally use this model. So it is the one of the basic model. It is the one of my which I have mostly used this setup for taking buy trade. If you need this model, you can combine with your entry model. Don't be changing the entry model like 1 week I will trading this entry model, next week I will change it to that. No, 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 that's wrong, man. First, you need to clear what the entry module you are using. First, you need to be clear what I should do. If you are taking one entry module, you should master one entry module. First, I don't know how to create an entry module. Once I create my own entry module, after that, I am creating so much entry module by this model, by using fair value gap, order block, breaker block, and like OT entry. So first one entry module is too hard to understand. If you understand one entry module and you are taking a trade, which is my win rate is near to 60 to 40%. That's my win rate, really. So if you practice lot of the time you have practiced. How does the master created? If you practice lot of the time, he will create the master. If you practice one more time, you will be the master of this time. So take one entry model and master it and become a success. So most of the traders are complicating the trading like rocket science. They'll complicate this as a rocket science. So you don't do like that. So I will explain you. Let's enter into the concept. First, we need to see the market should be in the downtrend. We can see the market is going downtrend, making lower low. So what we are waiting here is the market need to break this liquidity, which means market should create any something low like this previous low. Okay, which is known as previous low. When market take this liquidity, market taking this liquidity, after that the market should what the market should do means the market should come below some PDRI, which means which is the higher time PDRI, which is below to sell side liquidity. So first thing we need to find any scenario to opposite here. When market breakout symbol, which is known as sell side liquidity, when market breakout the sell side liquidity, we are waiting to see for buy trade. When sell side liquidity breaker, we are taking for buy trade. Okay, our aim to take buy trade. So okay, I think you understand. First step is market need to break the buy sell sell liquidity. After that, the market need to take come to below PDRI, which means higher time PDRI, like which is mean the PDRI. Fair rally gap, order block, breaker block, that's are known as higher time PDRI. When market break this liquidity, after that market come down to this higher time PDRI, which is the key reversal point. The first thing you need to understand where the market is going to reversal. So this is the smart money reversal. When market come to certain point, then it's going to trend. You can see here what the market is doing here. Market is coming down, 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 down. After certain point, this is the place where smart money works here. After smart money, place their buy or sell order in here. After that, market going to reversal, creating our market structure sheet, which is going to sign off change of trend. So I think you understand. So if you have doubt in this, you can ask me. Okay, guys, first step which means sell liquidity. After that, we need to have a higher time PDRI, which is now fair value gap, order block, breaker gap. Here is the rules. First one, sell side liquidity. For buy side, we are taking a buy side, we need to have a sell side liquidity. So we consider this. After that, below higher time PDRI, which is like fair value gap, order block in 1 hour or 4 hour. You can wait for liquidities. People section, we can use Asian section low, New York section low, ASN section low, London section low, like that you can trade in this strategy. So after sell side liquidity, we are waiting for market structure shift, which is known as trend change. Why, how to find this reversal is correct or not? If market taking a liquidity point, after that it will give a huge displacement like this. So if there is a displacement, we think like there is a reversal. Reversal is going to happen. If there is no movement, if market breaking this low, if market breaking like this, just doing a consolidation here, and you are not going to, you need to trade when market break this low. When market break this low, when you must take a trade is, which means you need to have a huge displacement. If there is a displacement, then you can easily able to take a trade. There is no displacement. We are going to take a trade. If there is a displacement, we can get a market structure shift, which is our third rule. After that, we are waiting for that market to come to insert the PDR, which is known as our fair value gap. After making this market structure shift, if market is moving upward, the market, okay, wait, I'll explain. The market don't move like this in upward. The market move like go on uptrend, higher high, then some come to down, which is internal range liquidity, external range liquidity, internal range liquidity, like that. I explain how does the market work, external to internal range liquidity. So when market create on high, after come to an internal range liquidity, which is known as fair value gap, here we enter into a trade, which is known as fair value gap entry. We waiting for the market to come out fair value gap to give an entry, so we get our entry. We keep our target above swing highs this swing high and this swing low specifically. So we are targeting this swing highs above swing high. So first step, the market is breaking the sell side liquidity. Below there is higher time PDR, which is order block or fair value gap. Then we are waiting for the market structure shift, which is our third confirmation, and which is our entry model, which is fair value gap to give our entry. After market structure shift, we can use, I use specifically this, which is known as OTM. When market come below this 0.62 level, I will place my entry. It is a high probability. I am using fair value gap and OT level. It is the two confirmation. You can combine like this. First you combine, you can add fair value gap. After that you can add a fair value gap plus inversion fair value gap. If there is any fair value gap in the website, you can call this as a inversion fair value gap. You can name this as a inversion fair value gap entry module. So you can create your own method. So if you have a doubt, you can ask. Then next video, I will teach you how to draw this entry model in the live chart. Now I have teach you how to draw this in a line chart. Next strategy, I will next this same model. I will say you how to draw in the live chart. That's the difference in the studio. Thank you guys. I think if you may understand, you can ask the comment section. If you don't understand, you can ask in the comment section. Thank you guys.